Shopify stock is down over 17% after reporting earnings. This is one of their slowest revenue growth quarters ever. They did miss expectations on revenue and earnings per share, and they're spending a nice amount of money on an acquisition. Is this game over for Shopify? I think not, but let's learn more in today's episode. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. Shopify right now is sitting at about $400, down 17.45% as I am recording. We can see it's definitely not been a great time to be a Shopify investor. The stock is down over 76% from its 52-week high. If we take a quick look at expectations, unfortunately, in their most recent earnings, they did miss revenue compared to what analysts were expecting, and they did miss on earnings per share. Earnings per share expected was about a 0.65. About 65 cents, and what Shopify reported was around 20 cents on a non-GAAP basis. So they missed on revenue and earnings per share. Even though they did miss on expectations, there are a lot of positive news, and I don't think it's game over for Shopify just yet. I just think it's one that with this kind of news that we're seeing, I wouldn't be surprised if we see more analyst downgrades in the upcoming days, causing more of a negative downtrend. But we're going to see, I do believe in the long term of things, things are still intact. Revenue did grow about 22% year over year to $1.2 billion. And I do believe this is another fear, right? This is the slowest growing quarter for them. If we take a look at historically, in the past 3 years, this company has grown at least by 40%. Obviously, during COVID times, they were growing at even triple digits at some point. But now you're like, hey, this is a company that used to grow super high, now only 22%. 22% is still pretty high, but it's not meeting, I'm guessing, what analysts, what even investors might have expected. There are a lot of strong reasons for that, right? At the same time last year was a huge kind of quarter due to numerous impacts happening around the world. For example, the first half of 2021 did have form of stimulus paycheck. That's not happening now. And right now, things like higher inflation and increased mobility, right? More people are traveling around. It's also causing, I'm guessing, less shopping. Gross market volume grew 16%. This is, again, strong growth year over year. Double digits is still pretty impressive, but nowhere near the levels that was seen before. And monthly recurring revenue grew 17% year over year. Again, strong growth, but not what was normally expected. And this is one of the charts that they showcased in their earnings pre-call deck. And I want to say, seeing things like this is not the greatest. E-commerce growth is now normalizing as a percentage of retail sales. So when COVID hit, we can see a lot more people were purchasing things online. And I guess what many people were expecting, even myself, right? I was expecting maybe not a steady increase from there, but not such a sharp decline. I was expecting them to kind of maintain some of that percentage growth. But what it seems, it's just going back on track to where it was expected. So it's, even though e-commerce did do really well in the past few years, it seems like things are kind of returning back to the normal trend line. Obviously still better than same time last year, but it is kind of returning to the normal trend. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. All right, next I want to take a quick look at Next I want to take a quick look at how much Shopify is in the United States market. We can see right now Shopify remains number 2 at 10.3% of total market. Amazon is still leader at 4.1%, and this is a nice shift lift compared to 2020. In 2020, Shopify was 8.6. So we can see Shopify is growing, but also the competition is growing their market share as well. And I already talked about revenue growth, subscription growth, and monthly recurring growth, but here I just want to showcase the charts that we've kind of talked about just so we can have visual effects. Revenue growth up 22%. So we can see monthly recurring revenue continues to go up on the quarter-to-quarter and year-to-year basis. Here we can see the overall subscription revenue up only 8%. This one's kind of flatlining a bit right now. And then we can see GMV up quarter-over-quarter, and just the overall kind of strength this company has seen in 2020 and 2021. Now, what we haven't taken a quick look at is some of Shopify's product. Their Shopify payments is up 27% year over year, and it now presents about 51% of their GMV penetration. So Shopify payments is grabbing a nice amount of market share, and I like that a lot. If we take a quick look, Shopify Capital, which deals with cash advancements and loans, is only up 12% year over year. I do want to say this is probably due to the overall macroeconomics happening right now with high inflations, with high interest rates. I'm guessing many people wouldn't want to take out loans to open up new businesses at the moment. Now, if we take a quick look at guidance, originally the company expected Q1 to be weak and to kind of increase over time, where Q4 would be the best quarter for this company for 2022. Now the company says that for the first half of 2022, they expect it to be soft and the super high be the fourth quarter 2022. So it does seem like Shopify is kind of pushing that Q2 is going to be another not high growth quarter for the company, and investors should kind of keep in mind of that. Some other recent news for Shopify: they did announce a 10-for-1 split, which will be voted in June. They are also improving their Shopify fulfillment network, and this is something that I'm really excited about. During the earnings, they also announced that Shopify has reached an agreement to acquire Deliver, a fulfillment technology provider, to provide simplicity and scale to millions of merchants. The deal is expected to be valued at $2.1 billion, consisting of 80% cash and 20% shares. If we take a quick look at Shopify's most recent kind of balance sheet, they right now have about $2.4 billion in cash and about $4.8 billion in marketable securities. So this company definitely has enough kind of funds to be able to kind of pay for this acquisitions. And if we take a quick look, right now convertible senior notes is a little bit less than $1 billion. So I wouldn't say it's going to completely destroy the balance sheet. The company has plenty of cash and kind of short-term investments to be able to fund. And we see a nice portion is also going to be used to be paid off with stock base. And I'm not sure how the overall kind of FinTwig community or just the overall investor community is feeling about this acquisition, but I personally believe this is a really strong move for Shopify. Shopify has really tried to kind of increase their delivery network. They call it the SFN, their Shopify Fulfillment Network. And with their Deliver, this is going to remove the supply chain complexity for merchants of all sides on and off Shopify. And this is what Shopify does perfect. This is the ultimate toolbox for the e-commerce world. You go to Shopify, you get an account, and you get to use all the different tools. Maybe you don't even use all the tools, but this is a company that is pretty much a toolbox with hundreds of tools. So Shopify's fulfillment network and the delivery acquisition will power Shop Promise. And this Shop Promise is kind of like Amazon Prime, where you get new service that offers consumers 2-day and next day delivery options. And again, we have seen kind of competition with Amazon kind of entering a little bit more in this kind of fulfillment network where you can use Amazon's fulfillment network. The one great thing about Shopify is if you're using their logistics, if you're using Shopify's logistics, you get to kind of keep all the information of your customers. You get to design your packaging however you want. Where if you use Amazon's kind of logistic network, you're using their packaging, they're collecting your consumers' data. And with that consumer data, they may be able to kind of fight off some of the competition. Where Shopify wants to say their best interest is to provide the best for their consumers, because if their consumers are happy, they're going to do really well. Where some of the other competitions like Amazon, not only are they providing for those merchants, but they're also some form of competition to those merchants. So who is Amazon really trying to help out at the end of the day? So at the end of the day, I do want to say Shopify, with this stock drop, I'm really liking it, right? This is a stock that has fallen a nice amount but this is why I really enjoy the dollar cost averaging method, where maybe I might build a position at the beginning, maybe I bought in a little bit high, but dollar cost averaging over time can kind of average my overall pricing. And at the same time though, there's always limits. Even if the stock price has dropped, I always kind of limit myself to how much I'm willing to invest in a specific stock. Shopify hasn't really met that limit just yet. So for me, as the weeks continue, if it stays around these price, this is a stock I would gladly buy. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.